Good day, everyone. You can call me Olayinka. If you are just coming across my video or page for the first time, this is my personal channel or page where I share my outlook, where I review my previous charts, whether TP or losses. But TP is easier to share. But I'll try to also be sharing the loss trade also. Yeah, because we want to be transparent here. So for this week video, I want to review the what is it called, the chart and the trade I took last week, right? I took 3 trades last week. I took EURCAD, I took VIX50 index, I took good, right? But for the sake of this video, I'm going to be reviewing the EURCAD and the volatility 50 because there's no much to see on the gold, right? I actually closed it on Friday because it didn't get to my TP, and based on my rules, I don't like what is it called, taking trade over the weekend unless maybe I am far from maybe the TP is just close, and or it depends on the what is it called, depends on the the bias where I'm trading, that where my entry is from. So there are some places that my entry will be that I'm very confident that okay, it's going to continue from there next week, or continue from where it stopped next week. But there are some entry that I'm not confident taking over to the following week. I just wanted to eat the TP that week. If it did not eat the TP that week before Friday, or maybe by Friday before 11 a.m., I will just close it myself, because also I don't look for new trades on Friday. Yeah. So that being said, so we'll be reviewing the trade I took on EURCAD and volatility 50 index. So as you can see, this is one of my growth funded trader accounts where and you can see the EURCAD I want to review. I took the trade and I took profit at 400, risk $100, 1:4, and got 400. And for the volatility index, I took it in one of my live derivative accounts. It's a very small account. As you can see, the start balance is 10 and $13, and this is the trade. I got I risked $10 for that trade because I can't be risking $5 doing strict management for $13 account. So I just risked the $10 out of it, and I think I caught 1:4 also. 1:4 also. Yeah. So that's it. Enough of all those. Let's just go to the chart. I'll be using Go Chatting because I didn't pay for premium trading view, so I'll be using Go Chatting so that I can replay charts. I've already cut out the price for last week so that we can replay and start from the beginning. So for recap, let me share what I look for when it comes to when I'm analyzing. One, right? One is my bias. That's the direction of the market. Right? Let me see the direction where I feel the market is going to go. The second one is this is the DOL, draw on liquidity, which is the targets where I think the market is heading. Targets, the targets where the market is heading, right? And now I'll now look for a key level. A key level, right? The key level can be an order block, that's OB, it can be an FVG, it can be previous low, previous high, just those internal range liquidity. It can be inducements and all, you understand. So I don't do breaker block, I don't do breaker block, I don't do breaker block actually. Yeah. So the next thing is confirmation entry. So confirmation entry using my entry model. Or you can, let me just say model 1. Model 1. Model 1 entry. Right? So for this model 1 now, what I want to be seeing is a sweep of a previous high. You understand? A sweep of a previous high and a piece of a previous high and the engulfing of the purge candle at key time. You understand? At key time, very important. At key time. So one. So these are all what I look at when analyzing the charts. All these things must follow each other. You understand? All these things must be in place before taking any trade, right? All these must be in place before taking or any trade. So this is it. We have the bias, DOL, and key level confirmation entry, right? So this particular pair, I've had it on my watch list. I took a trade from it last week. If you watched the video, my first video, actually, clap for me. I have if I could remember, I think I have an invalidation candle here, invalidation level at this particular place. So this makes it that okay, I was, based on my analysis, then I was bearish, you understand, and the target for that particular week has not even been met. For that last week has not been met. I think the target was this place, right? Or is it this place? I've forgotten. Target has not been met. So as you can see, there's a sweep of this particular high and a close below, right? If you go down, this particular rejection week is going to be an order block and is a valid POI, also key level for it to reject price, you understand. So, and you can see this is like an inducement, or maybe you can say it's a previous high or anything. It's like an inducement for this particular rejection week. So I had my invalidation here. Though, because as you can see, this candle is just like a close. It's just like a close below. You understand? If you go down the time frame, you see it will be more clearer there. So it would have been that there was a close above this invalidation line. I would have said, okay, my bias has changed from bearish to bullish. You understand? But since it didn't close there, you understand, it didn't close there, and in fact it closed below this particular upper week candle, I will still say I am bearish. You understand? So this is that for the weekly. And if I want to go here, as you can see, this was a liquidity that was taken and there was a close below, right? So I can say this is a range that has formed, and this is also maybe a DOL. DOL price will I expect price to come to this particular place, but it might take long, but it's still a DOL. But for this particular sake of, okay, I'm a day trader, I just want to take my 4 hour, my 3 hour and just go, my DOL is going to be this particular point for the coming week. This will be the DOL I will target, right? So not being greedy, the market will present opportunity. So you can be taking the micro range and enter the trade till you get to this DOL that you think the price is going to get to on the long run, right? So that's that from the weekly. So let's go to the so from the weekly we are able to what is it called now, get a bias. So let's go to the daily to see if what we are thinking match what the weekly gives us, or what the weekly intends for us is the same as what we have on the daily, right? So this is like a visible change in state of delivery, right? So that will go from the weekly. So from the weekly now, if you look at it very well, we still have these are our range, but as you can see now, if you look closer, there's a trend. There's a trend line here, right? There's a trend here. There's a trend here. This is 0.1, 0.2, 0.3. So it's 0.3, right? So I'm expecting that, okay, if there's going to be a breakout and retest, breakout and retest of this trend line, I'm going to take my trade and check other confirmation also. But we can't deny the fact that this is a valid trend line that is happening here, right? So that is that about that. And for this particular day trade, let's just see how it's played out, because I didn't look at this chart not until on Thursday, and it was on Thursday I got the trade I did, right? So on Monday, oh, this thing is too fast. Let's cut it back. Let's cut it and increase it. So as you can see, the Monday candle and on Monday there was this candle, right? This candle is still like a inside bar, so it's not giving any information. And on Tuesday we have a break, and we have a sweep of this Friday and Monday candle. You understand? Sweep of those candle, and you see there was a break here, right? There was a close here. So this all alone has established the fact that, okay, we are going to have a lower price, because when there is a break, this is as formed like an change for that particular week. We have this is like a change in state of delivery, right? It's like a change in state of delivery. So we are expecting lower price. So, and you see on Wednesday the candle broke this trend line. Although if I'm focused only on my daily time frame, I will not take this as a breakout, because it's just like a week out and got back into the trend line. But when you go to the what is it called, 4 hours time frame, as you go to the 4 hours time frame, it becomes more visible. This breakout, it broke out with a displacement and gave us a change of character here. So it gave us change of character here, right? So this is like a change of character, because it broke with a body, right? This is like a change of character, and we know that okay, there's a 1 hour CISD here, change in state of delivery here. So we can say okay, if I take my Fibonacci and take this if I take my Fibonacci, right, Fibonacci from here, if I take my Fibonacci from here to this particular place, this has given me a dealing range, right? I have a dealing range. I expect price to go up into this premium, you understand, and sell, you understand. So, and inside this premium there is a fair value gap here. So, and since there is a break of a trend line, according to the rule of trend line, you expect that there should be a retest of this trend line, then it sells, you understand. And if you look at where this LVG is, this LVG is in line with this. Even if the market wants to retest this trend line, is going to be at this LVG level, you understand. And you know there's a break, these are already. So now we have at a key level inside a discount zone, you understand, and also in line with the taste of the trend line, you get. So this is a key level. So I'm expecting price to get into this key level, and when price gets into this key level, I will now go, because I will not, you understand, I will not take a trade without confirmation. I don't set limits, so I have to wait for that my confirmation entry that I talked about. I have to wait for my confirmation entry model that I talked about, you get. So I will not just go in blindly. So let's play price. So as soon as we play price, you see that this candle has purged into the key level, into our internal liquidity, right? So, and this was I think this was inside our what is it called, inside our key level. So I will go to the 15 minutes. So as soon as I get into the 15 minutes, right, as soon as I get into the 15 minutes, as soon as I get into the 15 minutes, you understand, there's a what is it called, a CISD, 15-minute CISD has formed already, but this happened 9:15, 9:30. It has passed the key time that I want my model 1 to form, you understand. That's past the key time. If not, it has been that it was at the key time that I saw this, I would have said okay, let me take this trade, you understand. But it has passed the key time, and also no liquidity. Like my high probability entry model, there must be a sweep, because this is like a, I think this was this, there must be a sweep for me to be very confident about that. This thing, there should be a sweep, then the model 1 form, but none of it is happening here. It's not on the key time, there is no sweep. So the confidence level for this particular pair, you understand, is not there for me. So, and it has happened on the outside the key time, so I let it go and wait for what is it called, I wait for New York section, because this is London section and it has passed the London key time that I would have said I want to take this trade. So wait for the London section, let us pray the price. So some people would have entered this trade thinking that okay, maybe the price has gone, I'm losing out of this trade. But you just have to have checklist and plan that you want to use to trade. When that plan is not there in place, or maybe that plan did not, your checklist is not met, just let it go. It will save you a lot of what is it called, losses, because when you start giving in on FOMO, you understand, that's when you start losing money. So see what happened, right? There was a sweep of this. You see, it would have been that I enter here probably, and my SL is not long enough, I would have been taken out, right? So but there was a sweep, right? So there was a sweep of this high now, you understand. So since I saw the, as I just, and is this is the key time, this is my key time for London section. So as I saw this sweep, the next thing I would do is to put my, is to, what I want to see now is the engulfing, is the this is model 1. You can call it model 1, you can call it CISD, anything you want to call it. It's just English, but me, I like calling it model 1 because it's sweeter in the mouth. Model 1, right? So let me change it to black. Right, let's change it to black. So let me even save it so that next time I won't have to be using it. So right, so I want to see an engulfing of this particular candle, you understand. When I see this engulfing of this candle, you understand, and even because this is the candle that poured liquidity, right? Since it's the candle that poured liquidity, some people can even put their that they want to see, some people can say that they want to see what is it called, that okay, there's an, the next candle engulf this particular one, since there's a sweep already. Some people want to put it here that this is where they want their entry to be, you understand. But me, I want this candle to be engulfed. So let us play. Yes. As you can see, there's an engulfing. So since there's that since as soon as I see that engulfing, I'll take my entry from this place. And most time I'm always on the chart around this time, so I'll just look at it and manually enter when the thing enters there, you understand. So you draw to, you know, with, I have a DO high down here, you understand. I have a DO high down here that I can say, okay, this is my target, but I don't want to be greedy. 1:5, then 1:4 is okay for me. As soon as I see this 1:4, as soon as I see that 1:4, right, I'm okay with it. So let's reduce this. See, 1:4 is okay for me. I don't want to be greedy. If not, normally I would have drawn it to this DO high that is here and just delete it. But you know, this is also a DOI because this is, sorry, this is also, sorry, this is also a DOI also. Is the 15 minutes external. 15 minutes, what is it called? Let's put it here. So let's put it here. So this is a 15 minutes what is it called, range low, or maybe you can call it anything you want to call it. So this is it. So I expect price to go into here and just sell to that place, and that's what I did. I entered there. I actually entered from even this particular place, not because I want to enter from here, it's because I was on my system and I watch the price dig in further into that place. As you can see, as you can see as you can see, the price went back inside. Some people say, ah, you want to take me out, you want to take me out. You understand? As you can see, the price went back inside. You understand? And it even touched this particular line that I said some people would have added. Where some people would have said, okay, their what is it called? Their model one is. You understand? So I just allowed it to go up. You understand? As I saw it coming down, I just manually took the trade. You understand? So let's play it. Let me increase it here now so that it will not waste our time. Bam. So that is what happened. You understand? So my four RR is net, and this is where the price goes. If my stop loss, if my target has been on this DOR now, you understand, which will still work out eventually. I would have, you understand, because this is where the price and this is where the market closed for last week. I would have said, okay, I will still leave this trade and all those things, but I've gotten an objective target already here, an objective target here. So I'll just take the trade and smile throughout the weekend, not thinking that, oh, maybe during the week Trump have said something that will change the cost of the price, blah 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 and blah blah blah. I will rest. You understand? So a little recap now. If we look at this what is it called, this write-up I gave before, you can see I looked for the bias, I looked for the GOL, I looked for the key level, a very unmitigated, very important unmitigated key level, and I waited for my confirmation entry, which is model 1 entry, and model 1 should have a sweep, a proper sweep at key time. And when I saw that, I didn't hesitate, I took the trade. So that's it about what is it called, EURCAD. So the next one now that we'll be reviewing together now is the volatility 50 index, right? So let's go to that particular one. Okay, let's look at the V50. If you look at the V50, it makes sense when we look at it from the monthly time frame, right? So let me bring back those conferences or maybe the plan checklist that I normally follow. So if you look at this from the monthly time frame, you see that we are very, 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 very bullish, right? Sorry, rather we are very, very bearish. Even to the blind is visible. So we have from this place there is a break of structure which closed below this March candlestick, and we can see that, okay, we have a drawn on liquidity on this particular liquidity here. So I'm expecting price to get to this drawn on liquidity. This is my primary drawn on liquidity, because we have primary drawn on liquidity, we have secondary drawn on liquidity. Maybe I might make a video to explain that later, but we have this is a monthly primary drawn liquidity. So I'm expecting price can go up, go down, but I'm still expecting price to get to this price. But as a day trader, I look at what is presented to me at a particular time, because I can decide to trade by when I see that, okay, the retracement makes sense for me to trade, and still trade what is it called, the normal buyers that I have. So I can look at inside all this monthly time frame. Now you can, some week can present a very good buy opportunity, some week can present a very good sell opportunity. or the bias based on the candles that we are looking at now. Based on my bias, we are very, if you are taking sales, you are not counter trading, but if you are taking buy, you are basically to counter trading. You understand? So this is my monthly draw on liquidity. You understand? But if you look at this June candle, this June candle swept the high of this May candle. So this is like a turtle soup. If you are familiar with CRT, this is like a turtle soup, right? Let's label it monthly turtle soup. That's MTS, monthly turtle soup, right? So when this happen, I'm expecting price to get to this point as a DOL. You understand? So this is another monthly primary drawn liquidity. So you can decide to, this is another monthly drawn liquidity, right? And this is another monthly drawn liquidity. So this is like a final primary drawn liquidity, but if you are taking it step by step, price supposed to get to this this particular one before getting to this final one. So just take note. So let's go down so on the weekly, as you can see, so this is us last week, right? This is last week. You understand? This is last week candle. So on the weekly time frame, we saw this. This is where the price is reacting from, and these are our targets. Even though I think we've not met the targets, it's still remaining small, right? However, we have a B. You understand? This is a weekly order block that is capable of pushing price down, right? So as you can see, this is a key level. You understand? This is a key level. It's capable of pushing price down. If you can see, price reacted from here and still went down, right? So from this point, so let's concentrate on this. This is the candle we traded last week, right? This is the candle we traded last week. So let's concentrate on it. So as you can see, we had this level, right? We had this level, and we had this level, and we have this level. This is the previous candle. With this particular sweep, it would have been that normally I would have said that this sweep this place. You understand? We're expecting price to still go higher to a particular maybe TOI up and still go up and to take out this particular listing, but you know we have this key level here that is pushing price down. So I won't expect price to go back to that place till maybe a drawn liquidity is met. You understand? So let's go to what is it called, daily. So on the daily, you understand, on Thursday we had this what is it called, sweep of this particular low here. So we can see this place is like this place is a swing point. Is a swing point. This is a low. Is a swing point. So you can call it swing point. So that swing point, which is a low, a valid low, it's capable of at least causing a retracement because it's like a what is it called, previous low. You understand? It's a previous low. So we have this, and as soon as I see that, okay, we saw this particular candle on Thursday, right? I saw this particular candle on Thursday. I went to the 4 hours to just confirm, okay, what is going on. And when I came to the 4 hours, that's when the thing now became clearer, because I saw this morning start order block, or we can say is a morning start order block, or we can say is a change, a 4 hours change, a 4 hours change in state of delivery, right? So I expect that if price go below this place, it's going to go and seek any available POI that is unmitigated to buy. So basically we are to buy. So that is what the price is presenting to us at this point. You understand? That's what the price is presenting to us at this point. So, and what the price do, price went up, price came down, right? But when price came down, it didn't get to this our POIs, but we saw a POI here. This is a POI, a valid POI or key level. So I want price to get to this key level, then I'll go below to the 15-minute time frame and check for my what is it called, and check for my entry confirmation model. You understand? And buy. You understand? So when price dug into this POI, I went to the 15 minutes time frame, and when I came to the 15 minutes time frame, as you can see, it's even become very lovely, because as soon as I saw that price was ranging, this is like a ranging profile that we have here. As soon as I saw this ranging profile, if you are the one that understand this accumulate a power of three, like accumulation, manipulation, and distribution, this is like a range profile. You understand? And as soon as I saw price ranging, kind of, if you even go to the 30 minutes, that range is more visible there, as you can see, right? So I was on the 15 minutes time frame because my POI is 4 hours. If you want to check the relationship between higher time frame and lower time frame, if your POI is on the 4 hours time frame, check for your entry at the 15 minutes. If it's on the daily, check your entry at the 1 hour. If on weekly, check your entry at the 4 hours, like that. And I probably make a video about all those ones later. You understand? So when I saw this ranging profile close to my POI, some people would have entered here when this thing broke this place and say, no, okay, it has not even, it's manipulated before it even broke the place. So when you see this accumulation happen close to your POI, just be rest assured that there's going to be a manipulation into your POI before price started going the way you want it to go. You understand? If other things, if you get your key level right though, and your bias right. So on my key level, when I saw this manipulation, this range profile happening, like I expected price to manipulate into my POI and sell. And as soon as price manipulated into it, it formed that my entry model that I just talked about right here. That's model 1. And one thing I want you to understand, that when it comes to volatility, there's nothing like key time. Key time doesn't work on volatility, so just forget about the key time. If it's currency pair now, we'll be thinking about key time and all. For when it comes to crypto and volatility index, there's nothing like key time. So when you just see what you're looking for, you understand, you just take it. So we have model 1, this model 1, and it perfectly form a manipulation that dug into my key level, 4 hours key level. You understand? And I put my, what is it called here, and this became my entry. I expect price to come here to my what is it called, and I just targeted my what is it called, 4 hours, 4 hour. Don't need to be greedy. I would have even have opportunity to target more than that. Why? Because if I go to the 1 hour, you understand this particular expansion that happens here. If I go to the system, I'm tired getting slow. If I go to the what is it called, to the daily, right, this expansion that happened from this expansion that happened here, and we are taking my Fibonacci, placed it here to this place. This current expansion would have been my, is my trading range. Is my trading range. Trading range. Is like a micro trading range, basically, right? Where is this trading range like? This is my trading range. So even though, since our initial bias is bearish, so what we are doing now, we are trading retracement, or you can call it counter trading. You understand? So if the thing is not okay, it will appear maybe when we go down. So if I want to buy, you understand, I expect price to go, you understand, above, maybe probably come to this POI, and I expect price to go above what is it called, the equilibrium level, this line that this Fibonacci equilibrium level, you understand, that's 0.5. And if I want to anticipate for sell, is anything above, after that equilibrium level, price, we can get price, can decide to start resuming sell. You look for an unmitigated POI, a POI and all. But you understand, so for this now, I can decide to now put my TP to this place, because I know before sell start resuming again, it will be above this place. You understand? But the thing is that I don't want to be greedy. I just try to maintain that my 4 because sometimes mentally I might not be strong enough to see. Sometimes price will come close to this 5 hour and go back to your entry and still go back to the target. Sometimes that emotional roller coaster, I don't want to start experiencing. I don't have let me say, I'm not strong enough yet to start experiencing on those things. So I just go for my 4 hour, even 3 hours sometimes, if I just, especially when it comes to counter trading, just 3 hour, 4 hour, just let it go. Just go. So that is how I got this particular trade. So don't forget, again, let me still remind you, right? Let me remind you this. So for this, what is it called, you look at your bias. Where is the market going? Where is the direction? You don't want to be trading against the direction of the market, actually, you understand, except when you understand the strategy you are trading can allow you to take all those short counter trades, you understand, but you make sure you reduce your risks and also don't be greedy about it. So you understand your bias. After the bias, another important thing is your target. When you identify your buyers, you identify, okay, this is where the market is going, this is what is drawing the market, this is the liquidity, that because markets actually run from liquidity to liquidity. It takes one liquidity, it goes to the next liquidity, take it out. It take one liquidity, it goes to another liquidity, take it out. So the most important thing you have to understand is liquidity. Where is price coming from? Where is price trying to go to? So you understand your buyers, you understand your drawn liquidity, and you get your key level. Your key level should make sure that is an unmitigated key level. You understand? I might make video about all those things before. It should be an unmitigated key level. And when you get to that your key level, I'm not the type. Some people set limits, what is it called, and just leave the trade to play out. But me personally, I want to see confirmation. Okay, when you get to my key level, is it ready to go my way or not? Because the market will soon present opportunity. We always present opportunity. Even though I didn't get it at that key level, you can still go and still come back, and I will still get where to enter from. You understand? Tech Risk taught us that, which is my mentor. And so when you get there, the next thing you look at is your confirmation entry. Me, I use model 1. You understand? I use model 1, and model 1 must happen at key time when it's currency play. But if it's all this volatility, BTC, it doesn't matter the time it happens. So far it happens, and that key level is high, and that confirmation entry is high probability when it sweeps liquidity and gives you that engulfing that I talked about on the video. So thank you very much. You are free to drop your opinion. You are free to drop your suggestion, and you are free to, okay, this is what you should have done better. I'm open to that, but let's make it intelligently. You understand? Let's not insult each other. Everybody's just trying to learn here, and I'm not here to claim maybe I'm an idol or I'm a mentor, I'm anything. This is just me documenting my entire trading journey the best way I can. You understand? So it's more about me than it is about you, but along the line we can be friends, trading buddies and everything. So thank you very much, and see you on the next one.